TD Ameritrade Network contributor Jenny Horn to the program. Good morning to you, Jenny. Happy Monday. Even with this stock sitting at $83, depending on how long your chart goes back, you can tell yourself a different story. Because I can look back over the past couple months and say, hey, this stock is sold off from 142 down to 83. It's getting absolutely creamed. But then you zoom out all the way back to this time last year. This stock was sub 20. It was $15.90 on the low. It has been incredible, even with this recent volatility.
Yes, and Alex, I think it's always very good to put those things into context because, you know, when looking on social media this morning, everyone is talking about how the stock has shed about 15% in the month of April. Their decline actually started sort of back mid-March. But like you mentioned, if you look at a chart from March of 2020 through March of 2021, the stock rallied as much as 960%. And at one point was up over 1,200%. So I think it's all relative there. When you see a pullback like this, you could say maybe the stock had just run up too far too fast and now it is in a period of correction, which of course we have seen in other stocks. PENN trades very closely in tandem with its competitor DraftKings, which they're both trading lower today. So I think, you know, it's always important to keep in mind, go to a longer term chart. It's always the first thing I do because I think it paints sort of a better picture for some of these high growth names. So last Thursday, PENN did have earnings that were a success on what would be considered most metrics, although the stock did not really react that way. They beat on both top and bottom line. And something I thought that was really interesting about their report was that the company's gaming revenues are more than 90% derived from physical slot machines still. So although online sports betting is still mixed in, it only accounts for about 10% of their gaming revenues. So, you know, although that we talk about online sports betting sort of being this growth engine, they are still making the majority of their money from physical slots. So they are still very exposed to brick and mortars, therefore, which to me then makes sense why the stock hasn't necessarily seen this strength as of lately. Now, the CEO had really good things to say following the earnings. He basically talked about their long game and their plans to continue expanding into new markets with their Barstool Sportsbook. Now, what many analysts are saying is this deal with Barstool is sort of a brilliant move on their part. They acquired about 36% of Barstool in the beginning of 2020 for just $163 million, so not even a huge deal. And Barstool has brought, you know, sort of this unprecedented, you know, exposure that PENN maybe didn't have before, because now a lot of people sort of look at the brands as synonymous. Another thing is Barstool has sort of tapped a lucrative market, which is men under the age of 30. Barstool Sports is like beloved with people my age. And it also sort of offers a huge advertising reach at very little spend, because so many of the Barstool Sports members are very influential on social media and they have a huge reach without PENN actually having to spend, that significant amount of money on advertising. So I think this partnership has been huge for them. Now, I think the fruition of these companies and sort of the success of these companies will be long term, because this online sports betting market is still so new. But the noise in social media with these names is super mixed, because there are the people that believe there is this massive room for growth in the United States. Then there's people that believe, of course, these stocks have run up a little bit too far too fast. So that brings me to our first tweet of the day, which we'll start with a more positive take on things, just from Ross Gerber, who says, PENN Gaming has been correcting for a while, expecting good earnings with casinos reopened and booming. Barstool Sportsbook has good numbers. I like this setup. So I think this is important because not only does he mention PENN Gaming, of course, with casinos, which is a huge thing. I saw all across social media how packed casinos have been lately, which is obviously a good sign of the economic reopening, but also PENN has plans to launch 10 to 11 more Barstool Sportsbooks in new markets by the end of 2021. So right now they've started with Michigan and Illinois, and now they have plans for 10 more. So there's that healthy level of expansion we're still seeing. But our next tweet takes a more bearish stance on these stocks. If you watch these names, you know that they tend to move significantly, like last week we saw. So our next tweet says, PENN National and DraftKings are such disappointments. Only good news for both every single day, and the stocks don't do anything. I just don't understand. I don't want to know what happens if there's ever bad news. So Kevin, I was curious your thoughts on this tweeter, because you have more experience, of course, than I do in the markets. But I would say to this person, I mean, stocks are forward looking. I would say that, these are growth names. So naturally, I think you could have great news, and the stock will still dip because, you have to have plans to keep expanding going forward. So I would say with some of these high growth names, it doesn't surprise me that they move to maybe to the downside so significantly, but I wanted your take on that.
Jenny, when you look at a name like this is really the tale of two different subjects, right? It's the quality of this company and the growth potential and the popularity of Barstool, and it's the overall popularity of gambling and the reopening of casinos, and a lot of good news. Then there's the other side, which is this stock has run up so far, so quickly. How many times, Alex and Jenny, do we sit on this show lately and talk about names that ran up to unbelievable levels during the pandemic and are now coming down? And the question is, when do they stop going down? Well, that's a difficult question to ask, but some of the valuations got absolutely absurd, and now they've come down off those. So if you look at a chart of Barstool and you take out the last several months, it's still a good looking chart, but it went way past what was reasonable. And well, as you know, you can say that about a lot of names, but we have to decide, is this a level where you can start to trade Barstool from the long side, or is it more room to go on the downside, guys?
Well said. The one thing I would add is, as this stock went from a low of $3.75 to a high of 142, Jenny, basically 40x over a year's time. Why weren't we asking that same question on the way up when there maybe was a lack of good news, yet the stock just continued to roar higher? And so it's easy for me to say, of course, hindsight looking back and separated from the stock. But I think sometimes we only ask the questions when it works against us. We're okay when things are working in the way that we want them, even if there isn't necessarily a reason tied to them. So that would be my takeaway. If someone asked me that question, that would be my answer. Jenny Horn, always a pleasure, and thanks for joining us as always. Kickstarting a great conversation, I'm sure, here on Penn National going forward as we welcome in the co-founder of LikeFolio.com, Landon Swan. And so, Landon, this is a very interesting name to talk about because of its association with one of the most powerful brands in social media, being Barstool Sports. But this at some point needs to contribute substantially to the bottom line because of what we've talked about, this extraordinary performance for the company. Talk to us about your data, what it means, and how this sets up for Penn going forward.
Sure. So I think this maybe go down as one of the best acquisitions ever. They got in at, what was it, $160 million for a minority stake, I think 36%. But still, the amount of revenue that's now being generated from the Barstool apps in just 3 states, I think it's Pennsylvania, Michigan, and Illinois, is very significant. I think they took in $660 million in bets and held about 61 million. In other words, profited. That's a general, that's pretty standard when it comes to sports betting, around 9 or 10% for the house to hold. And that their branding and their appeal to the younger consumer is really, really strong. We've seen a big pickup in the digital mention space for younger people. That's how they're going to be betting, is digitally. For the older crowd, they're going to be walking in. That we've actually seen a lot of foot traffic pickup. We look at casinos and horse racing venues. So overall, it's good news for Penn. And you can see here on this chart of Barstool Sports mentions, it went from very, very little to an enormous increase in September of last year. And they just keep continuing to go higher. It's very appealing. They've got a ton of users. And when you think about, the marriage between getting people to spend their money or bet their money on something, invest their money, trying to make more. You want to have that content. You guys know it. There's a bit of a connection with TD Network and Schwab and TD Ameritrade. You guys can see that content is extremely important, and personalities are very, very important. I think that translates right over into sports betting. It translates into a lot of things, and Penn was very smart to make that acquisition. So they've done a good job there. And we can even see when we look at just overall purchase intent of the company. This is not just Barstool. This company owns 40 different casinos and racetracks. So they've got a lot of footprints out there. They're getting money in. Of course, over the last year, they were basically shut down. They could not go and place bets. So there's a lot of pent up demand. Plus, with stimulus is going out, you can argue that inflation is going up, wages going up, everything's, the dollars are cheaper. Everyone seems to have more of them right now, and they've got that pent up demand for going out and having fun. I think this is a good time for PENN to capture that, and they are doing a really good job of it. So we're seeing purchase intent very strong. And just like that tweeter talked about, yeah, the stock has pulled back quite a bit, but it was on an incredible run. And you could definitely see this as a buying opportunity because this is a very profitable business to be in. I mean, when you're talking about horse racing, the house literally cannot lose. With sports betting casinos, pretty much you can't lose over the long term as long as you take in enough bets. So it's really just about marketing and cost of customer acquisition cost. And that's what they focused on with that Barstool acquisition. So I think this is a very smart company. They've done a good job and they're positioned well for the future.
Landon, I couldn't agree with you more what you're saying. And first and foremost, how big this company is. Basically, for our viewers, if there's the name Hollywood in front of a casino, it's probably owned by Penn National Gaming. They pretty much own all the Hollywood casinos. They also own the Tropicana in Las Vegas. But the high profile part of this company is that relationship with Barstool Sports. And that has brought a new popularity to this name and everything that they represent. So you're right. The growth of this company is promising in the future. The future of online gambling and everything that they offer is promising. Yes, absolutely. No one has to convince anyone that will be a profitable business. But, and this is a big but, Landon, that's not how we make our money today. We make our money by trading this stock. So we have to figure out what, based on everything that we talked about and how positive it is, based on where that stock is trading and what it's done since mid-March, which is go straight down. Landon?
Yeah, I tell you what, straight down from there, you're right. It's on a huge discount. I love this company long term. I think that they have shown that they're willing to make some smart bets at very reasonable prices. It's not like they put a ton of money behind Barstool. And so you don't know what the next move will be from them. And they have executed extremely well. You look at purchase intent here, that's people talking about either betting on the Barstool app or going to one of their 41 different locations, like you talked about, all the Hollywoods out there. It has been very strong. I mean, obviously a dip in 2020, but it's now picking back up and looking very strong. And I would say that based on this, based on the stock chart, I love the fact if I'm not an investor, like that one tweeter was, if I'm not already in and I see the stock pull back, not quite 50%, but quite a bit, it is down significantly. This to me is a buying opportunity. I believe long-term in this company. I think they're doing very well. And just overall, that with everything opening back up, we've got data saying that leisure travel is really picking up. People are going on road trips. They're flying more. They're going to places that are on vacation. And when you go on vacation, you're going to be near one of these resorts or near one of these opportunities to place bets. And they're going to spend money there. I mean, you've also got them adding, I think, 10 different Barstool Sportsbook branded sportsbooks, physical locations. So it's not just online. And then you've also got to think about the fact that every year there are more and more states opening up for digital sports betting. It's a huge revenue driver. Every state that doesn't have it is looking across the border at the one that does, saying, man, all of our people are going across, betting with them. They're getting all of our revenue. I know, in Kentucky, that's what we look at. Indiana has gaming and we don't, aside from, we have, Churchill Downs racing, that kind of thing, but we don't have casinos. So everyone goes across the river, spends their money there. Indiana gets the tax money. That's happening all across the nation. And as these states want more and more revenue, and as sports betting becomes more and more socially acceptable, they're going to be opening up. So remember, we talked about that Barstool app. They got $60 million last quarter in profit. That was on 3 states. So as more and more open up, that $160 million investment that Penn put into them is looking smarter and smarter. So long term, as people start to travel more and as states start to open up for digital betting, this to me seems like a home run.
Landon Swan, we'll leave it on that note. Great stuff, as always. Penn National Gaming, the co-founder of LikeFolio.com. So Landon Swan, we'll talk to you again soon. Thanks for joining us here on this Monday. All right, Kev.